Good morning. The U.S. market is currently closed, but the single biggest story from yesterday's session, the one lighting up pre-market discussions right now, is Cambium Networks. As of the close on Wednesday, October 29, 2025, the stock, ticker CMBM, stood at $2.95 per share. Now that price alone tells you nothing. The story is in the change. In a single day, it rocketed up $2.33, a gain of 377.35%. This wasn't a normal day. This was an explosion, an absolute monster of a move. With volume so high, it's clear the entire market just woke up to this company's existence. When you see a 377% gain, the immediate expectation is that you've missed the boat. You're looking at a short squeeze, a meme stock, or a pump and dump. You're thinking this is just a frantic dash for cash, a bubble that will pop, leaving a lot of retail traders holding the bag, especially those on platforms like the Robinhood app. The expectation is that this is noise, not news. But the reality here is something far more substantial. This wasn't a fluke. This seismic shift was caused by a single press release, a strategic move so profound that it has forced the market to completely reevaluate this company from the ground up. This isn't the next Tesla stock in terms of scale, but the reason for the move is a powerful lesson in technology and strategy. This isn't an acquisition, it's an integration. Cambium Networks just announced it is integrating its Cambium One network solution with Starlink. Let's be perfectly clear about what this means, because this is the entire story. Before yesterday, Cambium Networks was, to put it politely, in serious trouble. This was not a stock on anyone's buy list. In fact, just a couple of weeks ago, on October 16th, the company received a delisting determination letter from NASDAQ. Its stock price had been trading below the $1 minimum bid requirement for too long. It was also delinquent in filing its quarterly reports. The expectation was bankruptcy or a buyout for pennies. This was a company on life support. This is the kind of stock that automated systems like Schwab Intelligent Portfolios would likely be programmed to avoid or sell. The expectation was a flatline. The reality is that Cambium, in what looks like a brilliant 11th-hour move, just made itself an essential partner to one of the most significant technology rollouts on the planet, SpaceX's Starlink. Here's the deep dive on the why. Starlink is fantastic at providing high-speed internet to remote places. Businesses, schools, and distributed enterprises all want to use it. But Starlink on its own is fundamentally a consumer-grade product. It's a best-effort connection. It's not built with the security, the management tools, or the reliability guarantees that a large corporation needs to run its critical operations. This is where Cambium comes in. Its Network Service Edge and CN Maestro cloud management platform will now integrate with Starlink. This allows an IT administrator to treat that Starlink connection just like any other enterprise-grade line. They can now manage it remotely, apply security firewalls, manage traffic, known as adaptive queue management, to ensure a Zoom call doesn't stutter, and even aggregate multiple Starlink dishes for more bandwidth or for failover. Cambium just created the enterprise-grade on-ramp for Starlink. It's a classic picks and shovels play. They aren't selling the satellite internet, they are selling the crucial management layer that makes it usable for high-paying corporate customers. This move is a complete left turn from the company's previous trajectory. The market had priced this stock for delisting. It was trading around 62 cents. Then this news hits and the trading volume just went vertical. We're talking about a stock that might trade 1 million shares on a heavy day, seeing volume in the hundreds of millions. This was every algorithm, every trader on a SoFi trading platform, and every institutional desk all hitting the buy button at the same time. The high of the day yesterday was $4.18. It opened at $2.26, gapping up massively, and then just churned. This wasn't a slow climb. It was a war between people taking profits and new buyers realizing what this news actually meant. This is the kind of volatility that makes or breaks accounts, especially for those doing self-investing without a clear plan. It's a very different beast from the steady long-term investment strategy of buying Fidelity mutual funds or holding Apple stock. So what was Cambium before this? It's a global provider of wireless networking solutions. They build point-to-point and point-to-multipoint wireless broadband, Wi-Fi access points, and switches. Think of them as a competitor to companies like Ubiquiti, providing the hardware that lets you beam internet across a campus, a town, or to a remote industrial site. The problem was, this is a tough, low-margin business. They were getting squeezed by bigger competitors and facing declining revenue. Their financials were not pretty. The company was in a downward spiral. The old expectation was that this was a dying hardware company in a commoditized market. The new reality is that it might be a nimble software and hardware company that has found a massive, new, uncommoditized market, making LEO satellite internet enterprise-ready. This is a complete narrative shift. Let's look at the future outlook now, framed by this new reality. What happens next? First, that delisting notice from NASDAQ. This single-day price spike to $2.95, if it holds above $1 for the required number of days, likely solves that problem entirely. That's one major risk off the table. Second, we have to talk about valuation. What is this company worth now? One analyst had a $3 price target, which was hit and breached yesterday. That target was almost certainly based on the old business. It's now obsolete. The market is currently trying to figure out the total addressable market, TAM, for this new Starlink integration. How many businesses need this? How much can Cambium charge? This is where the real speculation begins, and it's why a sophisticated platform like Interactive Brokers is so valuable for traders who need to see level 2 data and options activity to gauge sentiment. This isn't a long-term investment story just yet. It's a show me the opportunity story. The next earnings call will be one of the most important in the company's history. They need to quantify this opportunity. The risks here are still significant. This is not a sure thing. This is not Nvidia stock with its dominant grip on AI. The first risk is execution. Can they deliver? Is the integration smooth? Do enterprise customers actually adopt it? The second risk is competition. Now that Cambium has shown this is a valuable market, you can be sure every other networking company is scrambling to build their own Starlink integration. The third risk is Starlink itself. What if Starlink decides to build these features internally and cut Cambium out? That's a major platform risk. Anyone holding this in their Fidelity brokerage account or individual brokerage account needs to be aware that this is now a high-stakes, high-volatile story. Your Fidelity wealth management advisor would likely caution that this is a speculative position, not a core holding. This is a fascinating case study for anyone involved in online investing. It shows how a company on the brink of death can pivot and find a new lifeline. It also shows the danger of chasing a 377% candle. The smart play was for those who understood the deep-in-the-weeds networking sector and saw this coming, or for those who were already holding it and likely very unhappy and just got the surprise of a lifetime. Anyone buying now at $2.95 or in the after hours where it reportedly touched over $6 is not buying the original 62-cent company. They are buying the new company with all the new massive expectations baked in. This is where investment help becomes critical. You need to understand what you are buying. Platforms like SoFi Invest and investing sites make it easy to buy. but they don't always provide this level of context. This brings up a critical question for everyone watching. This move was based on a fundamental change in the business. Comment below. Do you think this Starlink integration is a long-term catalyst that justifies a new, higher valuation? Or is this a one-time hype spike that will fade? I want to know what you think. To summarize, this is the perfect example of expectation versus reality. The expectation was that Cambium Networks was a failed hardware company about to be delisted. The stock price reflected that, languishing near 60 cents. The reality, delivered in a single press release, is that it has forged a deeply strategic partnership with one of the fastest-growing tech platforms on the planet, SpaceX. The market's 377% repricing in one day is the violent, chaotic, and fascinating process of a new reality colliding with an old expectation.